Well, BancoSol started as an NGO in 1986, and it transformed to a fully fledged microfinance institution regulated in 1992. It actually became the first commercial bank dedicated exclusively to microfinance in the world, something that even a lot of people in Bolivia don't know, but we try to remind them of that every time we have a chance. Today, the bank has around 450 million in assets, US dollars, a portfolio close to 350 million, loan portfolio. And in terms of deposits, we are able to fund almost 100% of our loans through deposits from the public. And that's been a very significant increase in the last 5 to 6 years. If we go back in history, in the year 1998, we were depending almost 100% from multilaterals, international investors, outside governments, agencies that were funding our operations. At that time, we realized that if we were to keep up with the growth of the portfolio, we needed to diversify our sources. So we started testing products, we started testing the market, we started testing and asking our customers if they thought about opening accounts in an MFI. So that was probably one of the main challenges in those times. And it took us a while, it took us a few years actually to develop the products that were going to generate a good response from the market. We had to face also the competition from the commercial banks that, of course, were the larger operators in the market. But particularly, we faced the challenge of having a population, our target population, that were not actually used to having accounts in institutions. And Bolivia, of course, had a history also of banks going out of business, people losing their savings. So it was quite a challenge. And after a few years, you can see the numbers that we have today, but it hasn't always been like that. So it was a constant testing of products. It had to do a lot with talking to our customers. And the other phase maybe had to do with the organization itself understanding how important the deposits were going to be. As with many MFIs, we were more oriented towards lending and not as much towards collecting deposits. It was something that just happened. Liquidity was there. They just had to deal with lending. But then, working with our people, training them, making them understand that in order to lend, we needed the money. So, it was a process that had to do with products, delivery channels, staff training, mentality. So it was, a whole thing, a very significant thing for the organization. We were fortunate to have people with banking backgrounds at the management level. They came from other organizations, commercial banks, many of them. Our CFO, our operating chief also, even our people from IT, because they have to also understand what goes on if you're going to be mobilizing deposits. So it was more like something that came from inside, but taking the model from the traditional banking system and being able to adapt it to the reality of an MFI. So it was an internal job that took many years, but people had the background. They knew the products, they knew how to do it in a different market, of course, and we were able to move that experience into the bank's reality. Our product is very flexible. Let me give you some characteristics. First of all, we don't require a minimum amount to open an account. We don't charge any maintenance fees that are very traditional in banks. We give them free debit cards so that they can have access to their money 24 hours, not only in Bolivia, but outside of Bolivia as well. Many of our customers, even though they are small merchants, but they travel to neighboring countries to buy some of their merchandise, to Peru, to Chile, to Argentina, to Brazil. And for them, it has become also a very interesting way of having access to their money without having the risks of taking the cash with them. No transaction limits also at the branch level, at the ATM level. Also, they can access their accounts through the network that we have developed. It's actually our customer cell phones that have a way of interacting with the bank. They can have access to the last 10 transactions that they have done. They can repay loans through the cell phone. They can look at the balance. They can transfer from one account to the other within the bank. So if you have a supplier, for example, that has an account in the bank, you can actually pay through your cell phone. We have started internet banking. We tested it on the market. Even though some of the answers were not very positive, but at the same time, we wanted to go and offer this as another channel to our customers. We see an opportunity there because even though, as I mentioned, our clients themselves were saying that maybe they were not going to be using the internet because either they don't have a PC or they don't trust this means of connecting to the bank. But it's the rest of the family. It's the daughters and the sons that are saying, I'm going to be helping my father or my mother doing transactions online because they actually do it all the time. You know, the kids, they are on the computers all the time. And, based on that, we're actually going into this product. And we think that it might be a success, in the medium term. We also use mobile branches. This is also new. We use them to reach places that are, a little far away from the cities, where in Bolivia, in the particular case of Bolivia, you don't really have that much banking networking. So these are branches that go from one village to the next, and they would come back, they would stop twice at the same village per week. So people know that, for example, on Tuesday, it's going to be there and it's going to come back on Friday. So people get ready, to make deposits or even to get loans, because that's something that we're doing also out of our mobile branches. We also have what we call the correspondent branches. These are tellers inside gas stations, convenience stores, small stores throughout our cities. They have the main characteristic of